All right, guys, welcome to the weekly outlook. Thank you guys for joining me today. As usual, we're going to start today's outlook. Just a couple little updates. You guys know that these weekly outlooks, I am no longer waiting 5 minutes to start. So if you're someone that usually listens to the recording, you do not need to skip in 5 minutes. We're going to be getting started right now. But let's go ahead and just jump straight into things. A couple things first, though. Keep in mind, guys, that anything you guys hear on today's webinar is just my opinion, okay? It should just be taken as educational and informational purposes only. Anything I talk about is not considered or should not be taken as financial or investment advice. And for those of you guys that do not know me, my name is David Schinkel. I'm the CEO and founder of Positive Traders, and I run these webinars every single Sunday for you right here on my YouTube channel. So if you're not subscribed, make sure you're subscribed. And just my intentions are to give a lot of free value, just share with you guys my opinions on a couple pairs. I don't go over every single pair every week. This week I'm going to be mainly focusing on the 4 pairs that I have outlined here that I have marked off on my screen. One pair in particular that we're going to look at, one of these 4 pairs I'm more interested in than the other ones. But as usual, I want to look at the news first. And sorry guys, just listening to it on my phone so I can see the comments too. But I just want to touch base on a couple of the high impact news that are coming out this week. I'm not going to go over every single red folder. I don't usually, but just a couple key things to point out. So this week, just first off, is an NFP week, okay? Meaning that we have non-farm payrolls on Friday. So Friday, as usual, you guys probably know the drill if you've been trading for at least a month since last month. You know how volatile NFP can be. It comes out usually the first Friday of every single month. It doesn't always come out the first Friday of every month, but 99% of the time it does. So that is something to keep in mind. Also, and actually a good example of that is this past week. So March 1st was actually Friday if you look at the calendar. And so that was technically the first Friday of March, didn't come out the first Friday. So it's technically not appropriate to say that NFP is the first Friday of every month. It's just usually the first Friday of every month. So we're going to get some numbers for February's employment, unemployment, all that good stuff on Friday. Obviously, that's pretty high impact for US dollar, we know that. But a couple other things that are, I guess you could say, like we aren't used to seeing every single week is Wednesday, we have an interest rate decision for the Canadian dollar. Let me just start at the top. So Monday, we have an interest rate decision for the Australian dollar. Okay, so tomorrow, RBA releasing a rate statement. Now, in my opinion, if you guys don't know, the Australian dollar, Australia, they have not changed their interest rate decision in some time. You can see the last time they changed it was back in 2016, it looks like, middle of 2016. And it's been at 1.5% since then. So really, I'm not expecting any surprise with this rate statement. I'm expecting them just to keep it at 1.5%. They aren't going to be changing it. I mean, I can say that in almost full confidence. Like I'm obviously not the Reserve Bank of Australia, but just with what's expected in the data that's out right now, there's no reason for them to raise or decrease interest rates right now. So they're going to just be keeping interest rates the same. That's actually one big thing me and my students have been following a lot with is the RBA. And that's also one of the pairs, or I mean an AUD pair is one of the pairs that I'm interested in the most, because if you've been following the RBA in their commentary on monetary policy over the past couple of months, it's really gone from, and you should definitely be writing this stuff down if you don't have enough time, to go through all the fundamentals and stuff like that and the research. Well, at least you have a professional trader here every Sunday, giving you at least a little bit of brief update on what I feel is important at the time. And right now at this time, I think it's just important to talk about the RBA. So RBA, Reserve Bank of Australia, right? They're the monetary policy committee for Australia. And if you guys have been following them at all with anything they've been saying, you will know that towards like the end of last year, actually like quite some time now, the RBA has had a positive outlook on AUD. Up until a couple of months ago, they started to kind of change their outlook on their monetary policy, because originally they were expecting their next their next rate hike, or maybe not like the next rate hike like this one coming out tomorrow, but the future ones. Basically, they were expecting like the direction of them to go with monetary policy is to increase interest rate decisions, whereas that would generally be good and would appreciate that currency. So it'd be basically good for the Australian dollar long term, which means, you know, it's big money, right? We're talking like hedge funds, like not million dollar, billion dollar institutions and companies that invest in the foreign exchange market. They would be probably buying the Australian dollar. Not probably, they would be buying the Australian dollar, right? They go where they get the best return on their money, right? They seek out volatility, just like even us as retail traders, we seek out volatility. However, over the past couple months, the RBA has changed their outlook on monetary policy from a positive one to increasing interest rates to now they're actually more so, it's like to the negative side with the Australian dollar. They're actually talking at basically like depreciation happening. That's what they've been hinting at. They've been talking about waiting for the data to come out, being very data driven decisions, just as it should be, right? Like, you should never be raising interest rates, just because they want to, or for, some sort of like personal inside interest, right? Everything should be data driven. So, but generally when you have a political speaker or like somebody that runs a, interest rate, the people that control the interest rate decision, so like the person that is in charge of the RBA, when you hear them say, oh, well, our outlook isn't, they never, if you guys ever watch a speech, what I'm trying to get across to you guys is that you will never have, like, let's take Jerome Powell, for example, okay, for the chairman of the Federal Reserve here in the US. You will never hear, or very rarely if you do hear this, like it's going to happen like once in a decade type of thing, you aren't really going to hear a head of a central bank say, be like very direct, okay? You won't ever hear them say, yes, the next interest rate decision will be a hike. You will very rarely see them. They tend to use very vague and kind of like wish-washy terms, but obviously analysts have, now that we know this, analysts have been able to almost like quote-unquote decode. It's not really like that hard to decode what they're saying. So when they say that they're, going to kind of like sit on the sidelines more and be more data dependent on information, well, what that translates into like real world trading is that they have a bearish outlook. That's all I'm trying to get across. Okay. So knowing that, now you should have this written down somewhere in your journal, or you should just know moving forward that the outlook for the Australian dollar from the RBA, right, from the Central Bank of Australia, is not good. All right, that's what they're saying, right? But they don't go out right and say, hey guys, our outlook for the Australian economy is shit, right? We are expecting just our economy to just go down the drain and be terrible, and we're going to be decreasing interest rates, right? They'll never come out and say that, just be direct like that, but that's like what they're basically insinuating by their, every time they speak, right? We see lots of people speak. And just to follow up on that, I actually think Tuesday is going to be a lot more volatile than Monday, because even though there's an interest rate decision for AUD, I believe the GDP that's going to be coming out on Tuesday evening, as well as Governor Lowe speaking on behalf of the RBA, I think this is going to, and this is just my opinion, right? This is just my opinion. We'll always keep that in mind. Only my opinion. That I think that is going to be more volatile than the interest rate decision. And you really don't know this stuff unless you follow the central banks, right? A normal retail trader, like we call like a rookie retail trader, right? Someone that's been in the market for like, a couple months, 6 months, understands the basic workings of the economic calendar and how important interest rate decisions are. They might look at the calendar and say, okay, well, Monday, interest rate decision, that's way more important than GDP coming out on Tuesday, right? Because GDP is just an inflation, and measure of inflation pretty much. Not necessarily though, but because if you understand just the background, and you understand that what I just said about how the interest rate decision hasn't changed in Australia for quite some time, well, then the interest rate decision isn't really going to have as much of an effect as maybe Governor Lowe speaking and in talking about the rate statement. Because remember, it's also very important to keep in mind that the most important thing, besides them just choosing the interest rate decision at that time or releasing what they've like left it at or are rising it to or cutting it to, is the rate statement, right? That's the most important thing. And then we're going to see Lowe speaking on that rate statement, and then we see GDP Tuesday, and then we see an interest rate decision, and then that's, we're going to actually switch off of our move to the other news now. So we're off the Australian dollar, and then we have CAD news on Wednesday. So we have we have an interest rate decision for the Canadian dollar. And I don't really have a lot to talk about on the Canadian dollar right now. I mean, we've been watching oil, we've been watching the Canadian dollar, right? It's a very oil-driven economy. And that's pretty much it, right? There's a lot of other high-impact news, lots of other red folders this week. But in terms of what I'm most interested in, it's going to be NFP on Friday and then the 2 interest rate decisions. But I have a lot of focus on, as you can tell by me, spending like 5 minutes or more just talking about AUD, I obviously have a lot of importance, me personally, with like my trading, looking at the Australian dollar right now, just because I really like also the technical setup of the Australian dollar. Also, just in the chat real quick, I hope you guys all had a great weekend. Hope you had a great weekend too, guys. Hope you guys all have a good weekend going forward. Brax, you said AUD, NZD for sure. I will agree there will be big moves there. I agree with that too. That's one of the pairs that we're going to look at right now. Junior says decreasing rates is good, increasing rates is bad. Actually, Junior, it's the other way around. Increasing rates is actually good and decreasing rates is bad. So, and that goes for pretty much any economy. And I wish I could like go more into it. I've gone over on my other webinars before, kind of gone into interest rates, but maybe one way to think about it is think about it from like a consumer perspective and inflation and deflation, right? I think if you're like a consumer and interest rates are up, well then you're going to be less likely to buy stuff, let's say like a house, because the interest rate goes up. So in that case, if you don't need to buy a house, then you don't need to borrow money. So the banks, the Federal Reserve doesn't need to print money, doesn't need to lend money out. So increasing rates actually causes appreciation, decreasing rates causes depreciation, generally speaking. Okay. So let's go ahead and look at these pairs. I'm not sure where everybody is today. It's like I don't know if today something is going on Sunday, but we have like half the people that we normally do in here. So good to see those of you guys that are in here are looking at, looking at winning, basically looking at doing some big things. So let's get into the charts. I'm going to come back to AUD USD. Well, actually, no, I'll just give you guys the value right away, okay? I won't hold you guys back, okay? So AUD USD, out of all 4 of the pairs that we're going to go over, in my opinion, probably looks like the best setup for this week, okay? Because I'd like to, I think on these weekly outlooks, I like to recap definitely some of my longer term outlooks. But at the same time, I also would love to deliver you guys like immediate value, something that you can take action on in like the next, couple hours or couple days, like this week, basically. And I think for this week, I think the best trade looks like AUD USD. Now, the caveat with this, though, is the fact that there's an interest rate decision on Monday, and then there's more news Tuesday evening, okay? So that's the caveat, because it looks amazing from a technical standpoint. I hope a lot of you guys can already see that I'm looking at getting short on AUD USD, right? Okay? For those of you guys that are obviously putting 2 and 2 together, you guys see where I'm talking about AUD numbers not looking good. Also, just another thing too, I know I'm all over the place, but I just want to address this, that the GDP that's coming out on Tuesday, it's actually scheduled or forecasted. I mean, there's no official forecast right here, but again, if you've been like watching the statements and the releases from the RBA, you'll know that they're expecting GDP to actually decrease. So that should cause a little bit of pressure to the downside on AUD. But I think that there could be a good sell opportunity on AUD USD. So obviously we can see like the long-term vision on this since the beginning of this year, or I guess we could say like the end of January. We've seen AUD, and this isn't this year, by the way. This is end of January last year. We've been in a major downtrend on AUD USD. Okay, those of you guys that have been following the moves on AUD USD, I really also like AUD USD because it's one of the pairs that I personally have a very high success rate on. Some of you guys may remember. I called a reversal back, or at least a bounce back here in October. And if you go back to the daily chart and you look at where we saw this bottoming back in October, those of you guys that remember and have been following along, we were looking at the Wyckoff method, right? We saw that spring to break like the yearly lows of 2018 at that time, and then price shifted to the upside, and we caught some really nice moves to the upside. So just a little bit of a recap that I think I know what I'm doing with AUD USD. For me, I can go and look at my numbers. I can go and look at my track record on my FX book. I can sort it by the pairs, and I can go see AUD USD. I have a higher success rate than other pairs, right? AUD USD, for some reason, it just have a good, good win rate with this pair. But that's also when I say a good win rate, it still means I lose sometimes, right? It doesn't mean like every single trade I take on AUD USD I win, but I just tend to win a lot more trades with trading this pair than I do with other pairs. So that's why I think my analysis is pretty valid. But okay, here's the gist of everything. Okay, is really what I'm focusing on. Let me zoom in again. This is the weekly chart. Okay, so we're gonna break it down a little bit lower, but so keep in mind, every single one of these candles is 1 week, right? This little tiny blue candle right here, this is this current week, okay? So this red candle, these two red candles are the past 2 weeks, et cetera, et cetera. I am a big fan. I wish I had my marker. I can't use my marker when I'm doing like the YouTube lives like I used to be able to do with Zoom. So you're just gonna have to follow my cursor. So what I really like at this point is it's kind of like I'm breaking it down piece by piece. So like the first part of me, I see this major downtrend from January, okay? So I can go and I can write on a checklist. I can say, okay, I know for a fact like zero logic really, right? Like you can have like an elementary school kid, like if they have with just basic understanding of higher highs, higher lows, lower highs, lower lows, and trend direction in like a 10-year-old, a 15-year-old could tell you that we're in a long-term downtrend if they understand the basics of this chart, right? So we know that right off the bat. Okay, so, and that's really only for like swing trading, right? That has really nothing to do with like intraday trading or trading this week. So for some of you guys, that might not have anything to do with you. Some of you guys watching this right now that only play swing trades, you obviously know this. Now, if I break price down a little bit more and I just look at where my cursor starts back in October when we saw this original bounce, right? So let's just kind of follow price action. We saw this really like strong bottom back in, like it started in September, took until about like late October. Like so basically 2 months it took for AUD USD to bottom, right? We called this bottom. We saw that reversal back in October. Not going to spend a ton of time going over the past right now. And we saw a breakout. This trend line is like a very long-term trend line. Let me just go down to the daily so I can validate this trend line. We can see, and this trend line has been here since like even before this drop. I almost say like magically, but I say that very sarcastically because nothing is magical, right? Everything happens for a reason. But literally this descending trend line, I've had this on my chart. If you go back and you look at my weekly outlooks from October of last year, even before then, we're talking like September of last year, this trend line has been here. I just continue to make this trend line longer and longer as price moves, right? So I extended this trend line. I originally had, if you see where my cursor is, where it like stopped back in like November, or where it broke out back in November, I originally had this trend line just stopping right here, right? Because we broke out and we weren't moving down anytime soon, or at least at that point we hadn't, right? But on like early December, middle of December, as price started to descend lower, then it justifies me to drag my trend line back further, right? Because I can say, okay, well now we're heading lower on AUD USD, middle of December, and so this is a good argument to see where we can possibly see a bounce on this pair, right? And then we see the flash crash in January, where it obviously like broke way low, but ended up closing, like I say, magically, right, sarcastically again, just sitting right above this trend line. So this trend line, in my opinion, is very valid. Okay, so I just wanted to cover that because some of you guys may be question or wondering where this line is coming from when I'm doing this weekly analysis right now, because it doesn't really make a lot of sense on the weekly. It makes a lot more sense on the daily, as you just saw. Okay, anyways, we see this bottom in October. I hope you guys don't mind me going like really in depth with this pair either, because it's just, I want to give you guys like my case, right? My case to shorting AUD USD, right? I want you guys to see like the whole story. All right. So we have the bottoming that happened like in that 2-month period, September to October, right? And then late October, early November, we break this trend line. We start to like move up a little bit. Really, we see that this is a correction, right? Ends up not being a reversal, ends up being a correction, goes back lower, okay? And then something else is interesting here, okay? So we see price move back down, right? This is a very volatile time, right? At the like very beginning of the year, right? And this is a perfect example why I do not trade the end of the year, right? Those of you guys that are students, those of you guys that are in the group, you've been following me for a little bit, even since like last year, the year before last, doing these webinars, you know that like pretty much the last 2 weeks of the year, I pretty much go like radio silent, right? I actually stopped doing the weekly outlooks. I don't trade. Even the first couple days of the year, I don't trade. Pretty much like the first week of the year, I don't trade, right? Okay, and this is just a perfect example why, okay? If you look at every single year, it's not like every year there's a flash crash like right at the beginning or the end of the year, but this is just further proves my case why I would rather let more liquidity get into the market. Because obviously when it's the holidays and it's like the Christmas season and it's the end of the year, right? I'm actually curious to go and look at the data and see how much the liquidity decreases by during the end of the year. But I would probably say it's at least 0.25%. I mean, at least a quarter, so like 25%. I mean, I'm just spitballing here, but we just know that there's a fact that there is less liquidity at the end of the year, so the moves are going to be a lot more volatile, which volatility is good, but at the same time, they're going to be a lot less reasoned, right? Or like there's a lot less reasoning for the volatility to be happening, right? There might just be like random volatility. Perfect example, the flash crash, right? And then all of a sudden you're asking, why the hell did AUD USD in a couple hours, if you guys remember that, couple hours move 300 pips and then retrace higher, right? Doesn't make any sense sometimes. And that is a lot of times we'll see such big moves because of a lack of liquidity, okay? So anyways, what's interesting about this is we see this bounce in this area, bounces right off of the same support, right? Right off of, I can actually draw a box off with this, right? This same support from back in like September, October, where we had found that bottom. Let me change this to a blue box for now. So that's kind of interesting to me. But what's kind of more interesting is just like this correction is the fact that we only saw a small correction on this trend break, and then price, very aggressively over like a 3-week period, or really 2-week period, went right back to the yearly lows. Now, what's really setting my case up for taking shorts this week? So if you're a student, yes, I'm probably looking at shorting AUD USD probably in the next couple hours here. Now, I do know that obviously there's some high impact news coming out. As I already stated my case or my opinion with the interest rate decision, I definitely don't think that that's going to be that volatile for AUD. I mean, it's going to be volatile to an extent, right? There's obviously a rate statement that's being released, and there's obviously a decision being made, a monetary policy decision being made, even if that decision is then keeping interest rates the same. However, as I said, I think GDP is going to be much more volatile, and I'm gonna plan my trades accordingly, right? I'm not gonna if I take a short on AUD USD, I'm not gonna take a short on AUD USD with a 15 pip stop loss, knowing that there's high impact news this week. No, it's gonna be like a swing trade, right? It's gonna be like a 75 pip, 100 pip, 150 pip, maybe even 200 pip stop loss, where I'm looking for, maybe if I take a 70 pip stop loss, then I'll probably be looking for like 150 to 200 pips. If I take a 200 pip stop loss, then I'll be looking for, 400 to 600 pips, right? I'm always looking for that 1 to 2 risk to reward or better on a trade, okay? So that's AUD USD, but anyways, just to kind of get into the grit, I really don't like spending that much time like covering everything for you guys, but I just also want to be like as an open book for you and give you guys my thinking. But so I told you guys like 10 minutes ago when I started breaking down this pair that I kind of like break it down into sections, right? We first looked at like this long-term outlook, then we looked at like kind of this, it's still long-term, right? Because it's September of last year, right? That's almost 6 months from where we are now. So that still gets, that's not really medium term. And then I would call this medium term, right? Is the past like month and a half or so of data. And pretty much this is what I'm looking at. And this is why everything ties together, okay? Is because after this bounce post flash crash, right? Long wick on this weekly. I really, to me personally, I invalidate this wick, right? This wick to me means nothing because it's a flash crash. Meaning that there's a reason to it, but it moved more pips than it like really would have if it was like, let's say, you know, middle of June or middle of July when it's like the middle of the year and there's like plenty of liquidity, and we know summer is like some of the more liquid months in the market, so that probably wouldn't have happened. So that's why, to me personally, I kind of ignore all the wicks from the flash crash. It doesn't really do anything for me. But what I'm really more interested in is the weeks post the flash crash, is the fact that once again we bounced off of this level of support, right? So we know, right? We know for a fact that pretty much this area where my the green or the blue box where my cursor is in right now, this is a strong demand level, right? When we talk about supply and demand, this is an extremely strong demand level for AUD USD. All right, so we know that there should be some buying pressure around this area, at least the coming weeks after the flash crash, right? Because we see another bounce off of this area, and we do see that, right, for about a month after the flash crash, right? And this is pretty much the end of January, beginning of June, because the flash crash was like the first business day. I think it was like January 3rd. If you look at it, let's see, January 3rd. Yeah, January 3rd. Okay, January 3rd was when it happened. And then you see the entire month of January. I mean, it kind of like hemmed and hawed, right? It kind of dropped for 1 week, but overall it moved up for about a month, okay? And it came back up to this resistance area from November, right? From the pre-flash crash, like where the correction was back at the beginning of November. And what I'm so interested in is it starts off with this big red candle here, okay, this February 4th candle. And we see once again, right, a huge weekly candle, because take a look at the correction candles, right? Just take a look on the screen right now at the blue candles on the screen, right? Every blue candle that you can see on the screen right now is relatively small, okay? With the exception of like this one back in September, like early September, which we haven't even talked about at all. And there's a couple like longer ones, this one for the week of November 12th. But for the most part, what I'm trying to get at is that when we see a week that just like drags down, like let me just take, for example here, take the week of October 1st, or take the week of even August 27th, right? Where we see like a little bit of a correction, like the buyers are really struggling to get back into the market, and then boom, like for 2 weeks, sellers just push markets down, right? And then we see a little bit of a correction. This is kind of an exception to what I'm getting at, because we actually do see a pretty nice correction on September. But then over the next 2 weeks, you see price like violently bring down, like push down. And what this is price action, guys. This is the markets telling us that the sellers are still in control, right? And even on this correction right here, very mild correction in terms of if we're looking at like this overall trend. And then, we see on December 17th, price like smack down, okay? And then what do we see here is the week of January 7th, week of January 14th, the 21st, and the 28th, price doesn't move a whole lot. Like the average range for those weeks wasn't a lot. And then all of a sudden, February 4th, a month ago, we see price smash down lower, okay? So we have seen like multiple pieces of evidence like almost every month in the past, actually, yeah, like almost every month. We really didn't see it in January, but almost every month for the past like year, pretty much year and a half. Like you can see it back here, back in June, right? Back in August, 2 times in August, where the sellers just really come into the market. Now we can see that this is just a seller's market, right? That is what I'm trying to get across the whole picture and break it down simply to you guys, okay? And now to kind of like get like micro the analysis down, get like macro analysis a little bit more. we can see that after this push down is also what interests me, is that the fact that after the week of February 4th, we see we see a strong push down on the week of February 4th. And naturally, if we know that this is a demand level, right, or around this area, this whole zone is a demand level for AUD USD, we should see some sort of aggressive push up higher on this pair, and we don't. Okay, we continue to see it just flagging. Okay, just going sideways. You can even see it on the daily, right? Here's another perfect example. You can even start to see it on the daily, where you can see from like basically February 12th to February 20th, so like a week, we see price correct a little bit, and then on February 21st, it makes a bigger daily candle than any of the past week, right? And then just like moves lower, right? That's another thing, showing selling control. So this all leads up to and then also just like actually looking at the candlesticks, right? Just looking at the candlesticks, seeing the fact that after this huge, strong, bearish engulfing candle, right, we really failed to retrace. It doesn't even retrace 50%. That's like not even really, that's maybe about 30% retracement, which is not a strong retracement for the week of February 11th. And then the week of February 18th, so just a couple weeks ago, we see nothing but, this is pretty much a doji candle, right? Like a neutral candle, right? There's like an equal wick to the top side, equal wick to the downside, very small sliver of a body, just showing really there's that week was primarily just a pure fight between the buyers and the sellers. Price just went up and went down that week. And then we see last week, which is pretty much the main reason setting me up for this week, and this is why I'm saying it like all kind of like boils down. And that's how I do my analysis, guys. I start from like the far left. I start on like the really high time frames, the monthly, the weekly, and then I identify trend. I go into the analysis a little bit lower. I look at like the price action, maybe not even on lower time frames, but a lower, because you can see on the weekly, we talked about like 3 different things that I analyzed on the weekly, but it's one time frame. So I don't necessarily, I will go down onto lower time frames, but I'll look at like the different set of data in one time frame, right? Whereas this set was like pretty much a year and a month. And then we have like this set of data from August, which is like 7-8 months. And then we have this set of data, which is basically 1 month. And then we have this set of data, which is like a couple weeks, but it's all based on one time frame, if that makes sense. Okay, and this isn't the case for like every single trade that I place, but I mean the whole premise of starting on the higher time frames, working your way down to the lower time frames, and looking at different price action inside of those different time frames, like multiple different things that you can get out of one time frame. That's the gist of my analysis in a nutshell. But this weekly candle, if you know how to read candlesticks, right, you can see that clearly last week. We can see because there was a long wick to the upside. At one point, this was a buyer's market for the week, right? Buyers held. And then at some point last week, we saw price push lower. Okay, and you can see that story if you look at it on the daily, right? Here's the exact story on the daily. So you see, let's see, what was the beginning of last week? What date was that? Let's see, that was the 24th, basically. So 24th. So we go to, beginning of last week is this blue daily candle that my cursor is on, and we can see, just for like the Sunday, Monday candle pushed up a little bit, and then for the rest of the week, price pushed lower, right? The sellers came back in control, okay? And that's what I'm trying to like point out here, is that the sellers keep taking control of this market, and that ultimately led to this bullish or bearish engulfing exhaustion type daily candle or weekly candle to be formed on AUD USD. And that leads me to believe, so that is the technical side of things, okay? And then also remember that I'm really focused on this pair because of the fundamental side of things, right? If you weren't here at the beginning of the webinar when I spent 10 minutes going over the fundamentals of the RBA and their outlook on AUD, watch the recording, but I went over all of that, so you know the fundamental side of my bias short on AUD, and now you know my long bias, my technical bias of being short on AUD USD as well. So I obviously like trades, or I like trades the most that my technical and my fundamental biases coincide with each other. All right, so I'm going to be looking for a short this week on AUD USD. I'm going to be looking as far as targets go. The most logical target is going to be this move lower, back to this multi-year lows, back where we really saw like a bounce previously, back in like 2016. So that's like 68, 87, and we're actually at 70, 80. We can call it like this area is basically 200 pips away. Okay, so 200 pip move to the downside on this pair. Now, do I think it's all going to happen, that 200 pips, just this week alone? No, but I do think it's going to start to make its way to the downside, okay? So again, remember, like I said, my disclaimer, as always, not financial advice, but if you need a little bit of help, like deciding what pairs or pair to trade this week, I would really recommend taking a look at AUD/USD, okay? So that's AUD/USD for me. All right. Now Euro Yen, I just kind of want to do a little bit of a recap on Euro Yen. Okay. And this is for those of you guys that don't pay attention and like are not regularly on my weekly outlooks. Well, then this chart is just going to look like a mess to you and you aren't going to know why anything is on here. So just go watch some of the previous outlooks, right? I'm not going to punish the people that watch these weekly outlooks on a regular basis. Explaining something I've explained in the past. Okay, but you guys know I had a good short here, better short. Never took the position on this pair, but I've had that here since back in like the beginning of February. February 10th, I said that this would probably be a good short area. This would be a better short area. I never actually got into these pairs, like I said, but this was my outlook, and you can see like from my yellow boxes, it should be pretty clear that I'm expecting this pair to move lower. Now, the last couple days of last week, like Thursdays and Fridays candle pushing this high on Euro Yen, I will admit was not expected. So it's kind of breaking, and I would just say like invalidating what I'm looking at. So I just wanted to address that. I just kind of update everybody. For those of you guys that are diligent and you do write down my trade ideas and you do, want to stay updated with what I'm looking at and, with me updating things, that's my update on Euro Yen. I do still like a long-term short on Euro Yen, but for right now, there is just some incredible weakness on safe havens right now. So being, that being gold, right? Gold, we obviously saw a huge decline at the end of last week on. And then also, I need to mark that off too. And on and the yen, right? I've talked about this before, that the Japanese yen and gold are both safe havens, right? So we see gold drop, right? So we see a depreciation of gold. We also see a depreciation of the yen, which causes a pair like Euro Yen to rise. So I'm not a big fan of what it's doing right now. So I'm going to keep this here because I want to make sure I update my students on tomorrow's daily webinar with my students, for my students that aren't able to watch today's webinar. But yeah, I'm just kind of going back to the sidelines on Euro Yen for now. Okay, so I'm actually just going to kind of pull the plug on this. I mean, it's probably the wrong term to use because I'm not in the trade, but that's why I just had it marked off. Okay, I'm not interested in trading it, but I just wanted to make sure that I covered it. Okay, I do mark off gold though because I also think gold this week is going to have a decline. I think gold is going to continue to decline this week. It broke the 13 level, so it's sub 1300 right now, and I think it could easily move back towards this previous level of support from back in the beginning of this year. So actually started like December, came through into January. Okay, so I'm going to expect price to move lower on this. That would also be, there's a very small positive correlation between AUD/USD and gold also. So generally they are like, there's a small positive correlation. So that would actually, be good, because that would be our, my analysis would be having a little bit of confluence with each other. So gold moving down, AUD/USD moving down, generally speaking, they have a pretty positive outlook, okay? Another pair, still very valid. Guys, I see a lot of questions in the chat. Or a lot of comments in the chat. I'll get to that in just a moment. Let me just cover AUD CAD and then I'll take a look at the chat. So AUD CAD, guys, I am still very for this trade, if that makes sense. Okay, and again, I'm not going to punish the people that watch these weekly outlooks on a weekly basis. Spending 10 minutes going over this trade. I've gone over it on any of the previous weekly outlooks, pretty much like the past two weekly outlooks. I've gone over AUD CAD in depth, so watch that if you need to. But I am still looking to get short on AUD CAD. Now I have gotten short. Let me just correct myself a little bit. I have taken a short on this trade. Me and my students, we took a short on this pair. We've actually taken, I think, 2 shorts on this pair. Both shorts, actually one short we took some profits on, and another short we got stopped out at break even on. All right. So it's been, we've been pretty much just sniping this pair, if you will, if you want to use that term. I've been just like looking for entries, been being patient with the entries with this pair, and we've been letting these positions ride. Okay. But AUD CAD still is very valid to the downside. I expect we obviously, you guys know my fundamental outlook by now. If you've been watching this whole outlook, the first 10-15 minutes I went over my fundamental outlook with the Australian economy. So I'm expecting AUD definitely to begin to fall. Like we're talking like long term, like the next couple months, maybe like 3 to 6 months or more. Pretty much, until the data gets better in Australia. That's all. That's really what it comes down to at the end of the day, guys. For those of you guys that don't put enough focus on like looking at the numbers, you're gonna have a really hard time. Not a hard time, but you're gonna have a harder time capitalizing on opportunities, right? You can be 100% technical. That is okay, right? And I'm not trying to sound like a hypocrite because the main majority, sorry, I'm stuttering over here. The main majority of my strategy is technical, right? I didn't really start to get heavy into fundamentals until, I've always looked at the fundamentals, even students that you guys have been with me since I opened Positive Traders in 2016. We've always, I've always had a ritual of looking at the numbers. But as far as like actually keeping track of like the trend of the numbers and actually watching and putting, I guess for me personally with my trading, putting a higher importance on numbers. That way I can capitalize on more opportunities that I might not have if I wasn't focusing on the numbers, really started to happen last year. All right, and I have definitely noticed an increase in not just confidence, but an increase in winning trades since I started really putting a lot of focus on following the news. So if you are not putting focus on like GDP, CPI, those two, and interest rate decisions, probably those three. There's so many that are important, right? The PMI, the PPI, things like that, but CPI is really good, and GDP is really good, right? Because CPI pretty much deals with inflation, and GDP deals with still inflation in a sense, like the change of cost of goods, and then we have interest rate decision, which is like a no-brainer, right? You really are going to have a hard time. And I guess I should reword that differently. If you're a swing trader, okay, or if you're like a higher time frame trader, right? If you're somebody that likes to base most of your trades off of like the daily chart or the weekly chart, and you are not following like the macroeconomics, then you're gonna have a hard time, right? Day trading is a different story. I really truly believe that day trading, like we're talking like scalping, going for like 10, 20, 30 pips, things like that. You don't really need to have as much of importance on news because, a couple hours necessarily, right? That might take you to make like 20, 30, 40 pips, whatever your goal is, 10 pips, whatever. Generally isn't going to be as data driven as, like the psychological side of trading would be, right? Like psychologically understanding like market manipulation and that side of thing if you're day trading. But on the same token, right, there's like pros and cons, right? Like day trading is going to be a lot more stressful, right? You have to be in front of your computer all the time. You have to take trades all the time, right? And I will take a day trade here and there, an intraday trade here and there, but a majority of my trades are swing trades. Sit back, take the trade, shut the computer, go and let it do its thing, whether it takes a couple days, a couple weeks, whatever. And that's the way I like to live and trade, okay? But of course, if there's like a good opportunity on the daily, I'll take it. But yeah, I don't even really know where I was going with that. I think you guys kind of got the gist of what I'm trying to say. But AUD CAD, right? I kind of tie it into what I'm saying is that this is obviously a long-term outlook on AUD CAD. Therefore, I'm able to justify using fundamental analysis to justify taking a long-term trade on this trade, right? Because fundamental analysis is usually going to affect pairs long-term more than short-term. All right, so that's AUD CAD, and I'm still looking for shorts. I'm so tempted. I really think somewhere around now looks great for a short on AUD CAD. Like honestly, like shorting right now and taking and putting a stop loss, just above like last week's highs looks great, right? Looks like a really good opportunity to me. At the same time though, AUD USD also looks like a really good opportunity. And I'm kind of leaning more towards AUD USD because the quote currencies are obviously different, right? AUD USD, you've got the US dollar, AUD CAD, you've got the Canadian dollar. And if you remember, we have the CAD news that's coming out on Wednesday, the interest rate decision for the CAD, for the Canadian dollar. And if you've been following anything with the Canadian dollar, or not even just following anything with the Canadian dollar, but more so just versing two kind of weak currencies right now. Like the Australian dollar has like a weak bias to it, and so does the Canadian dollar. I would rather not like bet against two weak pairs. I'd rather bet against where my odds are a little bit better, where I'm betting on like a weak pair, which is AUD, and then the US dollar, which is very strong right now, right? We're seeing US dollar like relatively very high, like long term, right? It's in a this is the daily chart on the dollar index. It's relatively high. So yeah, that's why, and that's in terms of swing trades. Like keep that in mind. That is for swing trading. Okay, I mean if you're a day trader, you might be able to get a couple pips off of AUD CAD to the downside, really like making some downside this week. I'm not saying like you can't. Okay, AUD CAD does look great for short-term downside and long-term downside. But remember, if you're going like short-term, like don't take my long-term. What I'm trying to say is like don't take my long-term analysis and get in now over leveraging a position where you can only afford to like have like a 10 pip stop loss before your account is blown and targeting like the 400 or 500 pips that I'm expecting it to drop, right? You can't do that, right? If you're going to like aim for 400 pips, well then you need to take a stop loss that's appropriate with that 400 pips, right? You don't take a 10 pip stop loss with a 400 pip trade. I mean, maybe you do once in a blue moon, but I guarantee you do that all the time, your accuracy is going to be crap, right? You're going to and I mean, you can still win with low accuracy, but you know what I'm trying to say. It's going to be difficult to win a swing trade when you're doing an entry off of like the 5-minute or 15-minute or 30-minute chart and then expecting it to go to a target that you have based or price action that you based off of like the weekly or the daily chart. That makes no sense. And that is one thing, let me just say that very quickly. That is one thing that I think you guys should really like take to heart, is what I just said, is taking trades based off of the proper time frame. I see too many traders take us, let's just take like a random pair, for example. I don't even have to say a pair, just like let's just say it's a pair, right? A pair, they'll take a sell on a pair because they'll take a scalp. Let's say like an intraday trade. They'll take a trade with like a 15 pip stop loss and a 40 pip take profit because they have a bearish bias on the weekly, right? And then they ask why they get stopped out, and then they ask why, 3 days later after they get stopped out, they see the price drop, right? Because they get stopped out, maybe that with that 15 pip stop loss, price ends up rising, 60 pips, and then ends up dropping all the way, way past, like 200 pips. And then they're like, oh man, if I would have held, it's always like that. Oh man, I wish I would have held that trade, right? I guarantee how many, if I had, even me personally, right guys, if I had $1 for every single time I said, oh, I wish I would have held that trade, I'd be a multimillionaire, right? But you just have to like understand that the trades that you place, you need to have it based on the same time frame, right? If you're going to take a intraday small scalp where you have like a 15 pip stop loss and you're looking to make 30 pips, so you have that good risk to reward, right? You have that good risk management. Everything's good, right? Risk to reward is there. The 1 to 2 risk to reward, 15 pips for 30 pips. You're going to risk 2% of your account, so the risk management is there. Everything is there, except what might not be there is the fact that you're looking on the daily chart and then taking a trade just because you see like a bearish engulfing candle on the daily, so you're going to use a 15 pip stop loss. No. If you're going to do that, you should probably be basing your analysis off of like the 30-minute to 1 hour, maybe even 2 hour time frame. 2 hour time frame might be pushing it with a 15 pip stop loss, but something along those lines. You guys get what I'm trying to say. So make sure you really take that to heart, okay? Because I see too many people making those mistakes. And then vice versa too. I see people like jumping into scalps or like long-term trades just because of like a little bounce on like a 1 hour or a 4 hour, right? So make sure you're looking at like the whole picture, the bigger picture, especially if you're doing swing trading. Okay, so that's AUD CAD. And then AUD NZD. So AUD NZD, I don't have a ton of like immediate value. Here's my bias. I'll just come out and say it. I'm biased to the downside on AUD NZD. Okay, there's like no reason that it should move up long term higher. Just watch one of my previous webinars. Watch one of my previous videos on YouTube. If you want my outlook. I've gone over this pair multiple times, just as I've gone over AUD CAD multiple times. I've given a very, I mean, I don't even really have to say anything. You can just see the markings that I have on my charts, and you should be able to say, okay, that is clearly extremely bearish. No excuses, like there's no ifs, ands, or buts about it. Like it's a fact that the downtrend is down, okay? Now, obviously, there's always that possibility that this could be a bottom for this pair, but it's very highly unlikely, especially with the Australian economy like continuing to fall. Now, the one thing I want to point out, the reason why I said I don't know if there's any real immediate value with this pair is because look at it. Look at it. This is the daily chart. Like, look how it moves. It barely ever moves, right? It'll have a couple days every few weeks where it breaks out and moves, right? But for the most part, this is a pair that you're going to have to be patient on, okay? Now, I do want to point out one thing, though. I'm just going to pull up the rollover. So if you don't know what this is, you probably shouldn't even be trading real money if you don't know what swap and rollover is, okay? Like, straight up. Like, you really shouldn't even be. Like, I don't want to, like, put anybody down. But, like, really, like, why would you be investing real money and, like, literally just burning cash if you don't really know, like, all the different aspects about the market? If you don't know what swap is, go back to a demo account, go back to the education side, okay? But let's look at AUD NZD, and let's look. If you're short on AUD NZD, now it's not obviously a lot, but I'm just trying to say it's paying you interest, right? It's almost like a dividend with a stock, okay? You are literally gaining a residual, you truly are gaining a residual income. Not a lot, right? I'm not trying to say you're gonna go make your mortgage payment off of the swap on AUD NZD, unless you're trading with like a multi-million-dollar account or something like that, right? But the point I'm trying to make is that there's there's sell interest on this pair. Because guys, keep in mind put everything together with what I'm trying to say. Think about being being somebody that manages billions of dollars, right? An institution or a firm that has billions of dollars, right? Don't think your money. Don't think your $100 account. Don't think your $1,000 account, okay? Think about, because the way you're going to be successful with trading is if you have to detach your emotions of your personal money. You can't even think about your money, okay? You can't think about it. You have to think about what the market is doing as a whole, what market makers are doing. And obviously, if you have billions of dollars, it's a huge risk if you're going to be losing and your swap is going to be negative on a pair, right? That's something that you really have to consider. But if your swap is going to be positive on a position on a pair, then you have that kind of like backup. And that's what I believe is happening with AUD NZD, is that this is almost, if you think about like how stocks pay a dividend, AUD NZD is almost like a pair that pays dividends. Because think about this. Okay, think about this. Imagine, now I know this is hypothetical, right? I don't really like to get too hypothetical because it's not always realistic, but this is very realistic. This is getting inside the minds of market makers, guys. Imagine taking a short position on AUD NZD August of last year, okay? August of last year. All right, so we would be like 6 months later, and every single day, your account is just adding money to it, right? Even when you're in drawdown, you're getting money given to you, right? The broker is giving you money, right? Because you're gaining on that swap every single day that goes by. And then Wednesdays, you get 3 times the swap because of the weekends, right? Those of you guys that don't know what I'm talking about at all, like, you really, really need to go like learn about swap and stuff. It's just basic stuff, right? It seriously is basic stuff, basic. Same thing with like a bid price or an ask price, okay? If you don't know what the difference between those are, like, you're really gonna have a hard time struggling. You really need to like learn, all right? But I know there's a lot of you guys on here that do. I'm not trying to put anybody down. I'm just trying to like be real. I just don't sugarcoat anything, guys. I'm just trying to be super real with you guys of what you need to focus on. All right. And what you don't need to be focusing on is, oh, I need to catch 20 pips today. I need to catch 20 pips every single day. And I have some magical spreadsheet that I made up that says if I catch 20 pips every single day for the next 365 days, my $1,000 account will be $150,000. You're going to fail. You're going to fail. Okay, because you have so much emotional attachment to having to catch 20 pips every single day that you're going to start forcing trades and you're going to fail. Okay, that type of trading plan is going to fail. Okay, so if you have something made up like that, if right now you're a trader that's like, oh, I aim for 15 pips a day, I aim for 30 pips a day. Talk to me in 5 years, right? Talk to me in 5 years. Guarantee it's not going to work. All right, sorry, it just doesn't. Okay, you need to be, it's a yearly thing, definitely not a daily thing. Even if you're a scalper, if you think every single day of the year, of every single day of your life that you trade, you're gonna have a green day and you're gonna win, you're living in fairy tale land, straight up. Okay, but anyways, back to what I'm saying with this. Basically, this is a dividend, right? Those of you guys that don't know dividends with stocks, well, then it's not gonna make sense to you. Basically, a dividend is when, like I think one of the more common ones, because it's not an expensive stock, is like McDonald's, right? Like McDonald's is a company that pays dividends, right? So if you hold basically for every share that you hold or every stock that you hold, McDonald's is going to pay you just for holding it, right? Just because they're like, oh, we feel so confident, or or this and that we are going to pay you. Okay, that's the idea of a dividend, and that's what's going on with AUD NZD right here. Is that it's basically like holding something that is that's a dividend, right? Or that's going to pay you a dividend. So AUD NZD, imagine getting in back in August, you're getting paid even up until today, every single day. You're winning. You're making money. That's another thing with Euro USD. That's like another just little cherry on top also to my you guys should already know my long-term bias on Euro USD is to the downside long term. We're talking like mega long term. We're talking like 6 months to 2 years, maybe 3 years, maybe longer. Like Euro USD will shit the bed. It'll go back down to 1.00 eventually at some point, okay? But one of the just the little, like I said, cherry on top to my analysis is the fact that Euro USD has a positive rollover to the downside as well. Watch, look at Euro USD. Euro USD, major, pays you out. Okay, that's huge. Pays you out on every short, okay? You guys know what this is, right? This is $5. So if you're short on Euro USD, for every one lot that you're short on Euro USD, you will get $5.70. Okay? So again, use those, think outside the box, think being a market maker, think being a bank, okay? Think being a bank, right? You're gonna go sell Euro USD as a bank with billions of dollars. Right, think about like that lot size that you're going to use, right? Obviously, it's not going to be like one giant lot size. Like you're scaling into positions, but we're talking like literally thousands of lots, guys, okay? So that's thousands of dollars, like 1,000 lots, that's $5,000 a day that you're making. And we're talking like more than 1,000, okay? They're like tens of thousands of lots short on this pair. Okay, so they're making a ton of money just sitting here holding. So that's okay. They're totally happy with the markets consolidating because they're making more money on the rollover than that wouldn't necessarily be true because they're holding 500 pips short. But all I'm trying to say is like basically if you take like this bit of data, let's say somebody, in a firm, they have no reason to complain for, 15 days of it not moving, because they don't care, because not only are they already short 500 pips with thousands of lots, but they've been catching a dividend every single one of these days, a positive swap, positive interest on that pair on that position every single day that they're in it. Okay, so that is my outlook for AUD NZD. Okay, so guys, take this to heart. This is some good stuff. All right, this is some serious good stuff right here. You guys have to understand, like inside the mind of a market maker and a broker, right? Because when you're trading on a $100 account, $1,000 account, you don't care about the swap. Like you don't care. Okay, cool. I go long, right? I take a 0.01 position on Euro USD, and I'm gonna lose 13 cents, right? Every single day if I'm long on it, right? So it doesn't like matter as much to us, but we don't matter, right? We aren't the ones that move the market. You have to get inside the heads of the people that are manipulating the market, okay? So guys, that's pretty much it. Let me just hit up some of these comments really quickly. Christian, thanks, David. Any Brexit comments? No, right now I don't have any information on Brexit at the moment. Oh sweet, I've been following Euro AUD lately. Okay, I don't think I have Euro AUD on here. You're in actually assess potential for multi-week, even month-year breakout to the upside. I mean, that would make a lot of sense, Christian. I mean, the euro is appreciating a little bit. AUD is decreasing. But what I probably wouldn't take a long-term position on Euro AUD. I mean, I can pull up Euro AUD really quickly. I probably wouldn't be interested in any too long-term of positions with Euro AUD, just because of the euro, right? Because of the euro. I think the euro eventually is going to become weaker than the Australian dollar, and that's going to push this pair lower. But we do have that little bit of you can kind of see an inverted head and shoulders, and that right inverted shoulder made like a bit of a double bottom on Euro AUD. So definitely some argument to the upside I think can be made there. Don't take my word on that though, because that's just me taking like 5 seconds on it. Oh, definitely look at Euro AUD. Okay, that's Euro AUD. Any updates on AUD CAD? Okay, I'm assuming you probably said that EM, you probably asked that before I went into my spiel. Let's see, 38. Yeah, you definitely did 38. Okay. Wow, we ended up making this like an hour-long webinar. Okay, no worries. Before the downside move, I see short-term upside before the downside move. I could see that, EM. So EM says that he thinks, or he or she, sorry, I don't want to assume in this day and age, but AUD CAD could potentially see some upside. Now, I do see that manipulation because there is like liquidity above this area, right? There's going to be some liquidity up here. So there is an argument for stop losses to be ran higher. And especially also looking at the Canadian, the Bank of Canada, the rate statement and the interest rate decision coming out Wednesday. If we do see some really bad commentary for the Canadian dollar, then we could see some downside on AUD CAD. I mean, some temporary upside on AUD CAD. But I'm for me personally, like I'm really still sitting on the sidelines, like sniping, entering this pair on AUD CAD. Christian says, yeah, I like the look of it. Yeah, Euro AUD doesn't look too bad either. And then also, guys, I do just want to point out a couple things because I don't want to like go rogue on some of the ideas I've been looking at, because if you've been following me since literally the beginning of this year, when I called the top on January, I've been also sniping USD CAD to the downside. I think we've taken I take that back. I think I've taken 2 trades on USD CAD to the downside. Right here where my cursor is, back on January 25th, caught this top perfectly. And then back on the 18th, I believe, USD CAD, somewhere in here we took, just recently, within the past 2 weeks, I took a short on USD CAD as well. And I'm really not liking it right now, okay? I mean, I am still long-term biased, okay? So that has not changed. I'm still expecting USD CAD to drop 1,000 pips at least soon. Now, soon could mean a couple of weeks away, though, all right? A lot of this, the CAD, okay, USD CAD, NZD CAD, AUD CAD, NZD CAD too, right? Stuck in this range, really, really stuck in this range. Not a whole lot to talk about with NZD CAD. I'm going to have a bunch of CAD pairs down here. Euro CAD, look, bounced off of a pretty significant level of support last week. GBP CAD just broke out last week above, making some higher highs. So CAD is not looking too hot right now. Okay, we can obviously see that. The Canadian dollar is weakening. We also see that on oil a little bit. That's also another reason why I'm not too interested in AUD CAD. Okay, so also it's not also just the fact with 2 weak pairs, but it also has a lot to do with oil. I really would like to see oil hold these highs. We really need oil to hold these highs for CAD to do, for CAD to do well, for USD CAD to keep going down, for AUD CAD to keep going down. Because I'll tell you right now, AUD CAD, if oil craps its pants, guys, if oil just continues to fall, AUD CAD is really, even with a weak Australian dollar, it's going to be very difficult for this pair to move higher if oil doesn't move higher as well. All right, or it's gonna be harder for this pair to move lower if oil doesn't move higher. All right, so I'm really with the Canadian dollar for this week. I'm kind of like back to the sidelines. Actually, guys, to be honest, last week I didn't place a trade. I went into last week with a trade. I went into last week with a trade on AUD CAD. Okay, I had a short on AUD CAD. Or was it AUD CAD? I don't know. Yeah, it had to have been AUD CAD, right? No, it doesn't. No, it wasn't AUD CAD. NZD CAD maybe? No. Okay, it doesn't matter. That doesn't matter at this point. I went in. I was just trying to just be transparent with you guys. I went into last week with a pair on. Maybe it was AUD NZD. No, I don't know. I could have sworn it was an AUD pair. I'll have to look at my trading history. But yeah, I went into last week with holding a pair. Ended up getting stopped out at break even. At one point, that trade, I don't know why I can't find the trade on the chart right now. I was up 110 pips on the pair. Ended up moving lower. Why do I keep thinking it was AUD CAD? Was it AUD CAD? No, because AUD CAD didn't go down 110 pips from this pullback. I know I got in on a flag. I don't really know. It really doesn't matter though. Okay, so anyways, yeah, I just went into last week with a trade on AUD CAD. Ended up getting stopped out at break even. Spent the rest of last week just on the sidelines, not really doing much trading. And Simon says, what are your thoughts on safe havens like gold, silver, yen? Why such violent moves to the downside at the end of last week? And are you still expecting Euro GBP to drop to? Oh yeah, okay. I can talk about Euro GBP very quickly. Gold, well, gold has a lot to do with the U.S. dollar. The U.S. dollar finding strength, right? Because basically, it's not even really that the U.S. dollar is so strong, is that there's weakness on so many other currencies, like the Australian dollar, even the Canadian dollar has some weakness. That the U.S. dollar, in a way, is treated like a basically, if like you had to kind of make like a funnel of like all, or like let's say like a triangle, right, of the most important pairs, or like the pairs that are the most safe haven pairs, okay, or like that investors seem to flock to when there's like uncertainty in the market, right? Usually you'll have like the metals, like gold at the top, right? Because gold is a precious metal. It's just like perceived as valuable. And then you'll have a currency maybe like the yen, and then you'll also have a currency like the US dollar. So the US dollar is, in a sense, a safe haven. So I think that's what drove gold lower. It's obviously gold is priced against the US dollar, so we saw the dollar strengthen a bit, so we see gold drop. So that's my opinion. And then Euro GBP, yes, I do believe. Now, I unmarked Euro GBP just because of pound dollar, because pound dollar, I think pound dollar could go higher. I think it will maybe break up a little bit higher. But for right now, my eyes are more on the AUD pairs. But Euro GBP, it would make a lot of sense, right? Euro GBP broke the yearly lows last week. Not just last year's lows. I mean, not just this year's lows. It broke last year's lows as well. So it made new multi-year lows, and now it's heading down towards 84. So I do believe, Simon. So yeah, see, Simon, I like that, Simon, a lot. Like, I can tell obviously that I'm sure there's more of you guys like that, but by you asking that, obviously I can tell that you're on the weekly webinars, like actively paying attention and writing stuff down, or maybe even in positions, because I mean, Simon knows, obviously, because you guys could know too if you paid attention with Simon also, that last week up at the highs, I mean, even before last week, I called Euro GBP moving back down to the support level. So good job, Simon. IUQ, the guru, is on. I am on, guys. So guys, that is pretty much it for the week. Yeah, no problem with the questions, but any thoughts on WTI and oil? I mean, unless you're just getting in, Simon, those I kind of already briefly went over oil. I think oil is just kind of at a consolidation phase at the highs. It's sitting on top of the previous resistance that it broke out of, not last week, but the week before last. And from here, like I said, I just need it to hold these highs. Okay, so more consolidation around these highs would actually be ideal. I mean, the most ideal situation would it to be continuing higher, right? Break the highs, but actually, to be honest, that's not even really the most ideal situation, because that would be harder to get into it. The most ideal situation would be for oil to drop a little bit and come to the support level, and then like really drop, and then like make some sort of exhaustion candle, like really just holding a bounce off of this area. There was one more thing, guys, that I wanted to look at very quickly. Okay, it was this on AUD NZD also. Okay, so I know we've gone over AUD NZD so many times, and I actually think I went over this on last week's webinar. Maybe I just went over this with my students during the daily webinars. But we have, those of you guys that have read, there's lots of like Forex books and stuff like that, but there's one book in particular that I've read like probably a dozen times. Now it's fairly basic. It just goes off of patterns or like tradable strategies based off of like pure price action, just like chart patterns, which is very, I mean, obviously is like my go-to trading style. Okay, and one of in this style in particular, this strategy, one of the strategies in this book, it's called the last kiss. All right, basically what it describes is when you see price consolidate for a period of time. Like in this case, let me just say from, well, I have to put on the markings because it doesn't let me do it any other way. Pretty much this orange box, okay? This orange box, if you see, like from this blue box where my cursor is at to the bottom of this blue box, this consolidation that we're in, okay, talks about basically like rule 1 of the last kiss is step 1, you have to identify, or you have to have price in a range. Okay, you have to have price in a range, and that's what we do. See right here is price in a range. All right, and then step 2, to like look for a last kiss strategy or to trade the strategy, you have to look for a breakout. Right? Obviously, you're gonna have a breakout eventually, right? Whether that's in 1 week or 10 weeks or 10 years, you're eventually gonna see price break out of that range. And by the way, this range is like tight ranges. I'm not talking about like a freaking, you know, multi-hundred pip. I'm not talking like a 500 pip range or anything like that. Like we're talking like, you know, just go read the book if you want to learn more about it. Okay, but we have a breakout. Okay, so we have that breakout candle, which is right here. So we have that breakout to the downside, and then we have a, now once it says based on the rules. Okay, this is like going off like the Wyckoff method, right? Like I'm going based off of the rules that are already in place. Okay, based off of the rules. So that's step 2 was to look for the breakout candle, and step 3 is the candle after the breakout candle. So it's always like a sequence of candles. Okay, so you can have the breakout candle, then you're gonna have the next candle. This candle needs to be a retest candle, and what the last kiss says, okay, or what the author of this book says, he says that weekly candle needs to go back into the range, okay, so into that range that we had marked off previously, but then it needs to close back out of that range on the same side of the breakout candle. So exactly what we see here, right, with this previous weekly, which wasn't last week, but the week before last, we see price go back up into this range and then close back out. So even though it's a blue candle, even though it has a blue wick to it, it's still like majorly bearish, right? There's still strong selling pressure in the market. And then based off of the rule, now I'm like a little bit of a hybrid of it because I have other things that I look for and other pieces of confirmation for my actual entry. But if I was just trading off of the Wyckoff method, I'm not, sorry, not Wyckoff method, off of the last kiss method, you are supposed to take a, you know, if the breakout is to the downside and you get that retest and everything back to the downside, you take a sell. So in this case, sell, or to the up inverse buy. So in this case, it's telling you to sell, or based on his method, it says to sell on the open of the next weekly candle, right? Because you don't want to like miss that move potentially. All right. So basically, beginning of last week, you should have sold, and then stop loss is generally going to be. I mean, he has a couple different ways. He talks about an emergency stop loss being like 50% of the range. So there's different, I mean, I'm not going to go into the whole strategy right now. I just kind of want to point out that another piece of conviction to this short on AUD NZD is that really nice breakout. But I mean, you can also, without even having to know that it's called The Last Kiss or even like reading that book or knowing anything, if you can just understand like the reaction between buyers and sellers and price action in the market, you can obviously see, boom, breaks the range. Boom, next week goes back into that range, breaks back out, shows a strong presence of sellers still in the market. Boom, we see some more consolidation on this pair. That leads me to believe, go back to my original idea that this is a pair that could consolidate for a very long time, but I'm okay with that because it'd be paying me an interest, a positive interest every single day. All right, so that is that. Can you share the name of the book? Yes, it is called Naked Forex. Naked Forex. And Romeo, you asked, can we go into more details on dollar yen? So Romeo, if you've been here for my Euro Yen outlook, it's really kind of the same. I'm really on the sidelines for dollar yen right now. I did mark, and this has been here if you watched last week's weekly outlook or the week before last, I've been calling, and this has been here since literally like beginning of February. I've been predicting, not necessarily predicting price would go up to this area, but if and when price did go up to this area, it would be a good short. I do think dollar yen is going to be a good short, but it goes back to my bias that at the current state, the yen is very weak. However, with that being said, right, the whole premise of trading is like buying low, selling high, right? And I do see dollar yen is very high. It wouldn't be a terrible idea to take a stab at dollar yen with like a 1% risk. In a fairly decent sized stop loss, right? You need to have like a couple hundred pips stop loss at that point. I wouldn't be putting my stop loss anything really below 113.75. So that right there from 112 where we're at, that's like 175 pips stop loss, which shouldn't be any problem, right? That should like stop losses should not bother you guys. Let me just be very clear, and you guys should already know exactly how I feel about that. Is it doesn't matter if it's a 17 pip stop loss or 170 pip stop loss. It doesn't matter, right? It should not like scare you. I hate that stigma that people have, like, or at least new traders have, that as soon as I say 170 pips stop loss, they like freak out. They're like, they automatically rule themselves out. They're like, okay, no way I can take that trade. So that is so wrong though, right? Let's say you're trading with a couple $1,000. Let's say just randomly $2,000 and you want to take a 1% risk on USD JPY and you want to take 175 pip stop loss. You can still take that trade and you can still use good risk management, right? You just use a smaller lot size. You use a 0.01 lot size. Some of you guys might be saying, well, I have a $2,000 account, so I can use a 0.1 lot size. Well, go for it. You're just using bad risk management. Like that doesn't make any sense, right? Like those people that are like, oh, I'm going to use one lot for every $10,000 I have, and I'm going to use 0.1 lots for every $1,000 I have. Well, go ahead, do you, but you're going to be risking random percentages of your account because if your stop loss is like, 175 pips, well, imagine that with a 0.1 lot size, you would lose $175, right? And $175 on a $2,000 account is nearly 10%, right? That's like what, 7.5% or something like that. So you're pretty much and then whereas if you risk 1%, you lose $20, you lose 1%, right? I can sleep much better losing $20 on a $2,000 account than I can losing $200 on one trade, or let's say $175 on a $2,000 account, right? Because let's say what, 18, I just want to figure out 1825 divided by 2,000. Yeah, that is -1. Okay, it's actually almost, it's like 8.75%, I guess, that you lose. But still, look at that difference, right? Just by being like ignorant about the lot sizes and doing a 0.1 lot size, or you would actually technically be doing a bigger lot size, right? Because if you're doing let's say your guru that taught you how to trade, right? That doesn't know how to freaking trade, tells you to use a 0.1 lot size for every $1,000 you have. Well, then you're actually losing double $175. You're losing $350, right? Because a 0.1 lot size, if it goes to 175 pips drawdown, is losing $175, right? Or a 0.2 lot size in this case would be double that, right? So you'd be losing $350. And $350 of a $2,000 account, that's more than 10%. Right, that's almost 20%. Yeah, I'm sorry. Yeah, that's almost 20%. Right, 20% of 2,000 is $400. Right, like how like you know right now, you know that to be successful, you need to remove your emotions out of trading. Right, you know that for a fact. How hard is it going to be to remove your emotions from trading if you just lost almost 20% on one trade because you were ignorant to not using a position size calculator and risk management? Whereas let's look at option B, right? The trader that did use good risk management and did use a position size calculator, and for whatever reason, their trade hit their stop loss, just as trades do, and is you have to know going into trading that trading is imminent. How much better is it going to be? How much easier is it going to be for you to keep a handle and control over your emotions if you just lose $20, right? What's $20 of $2,000, right? I mean, I say that, um, I say that uh, because we obviously know that is 1%. It's nothing, right? It's nothing. You're going to lose no sleep, right? So you're going to lose like 20 times just by being ignorant about using a position size calculator. Just because somebody told you that you should trade a 0.1 lot size for every $1,000 or a 0.01 lot size for every $100 or a 1 lot size for every $10,000. It's the same thing all the way around. Or you let your emotions get to the best of you, and just because you wanted to be like that guy that posted a $10,000 day on Instagram that you have no credibility, no proof of them ever doing it other than a screenshot, and it just stirred your emotions as a trader and you want to be like them, that's why you took a trade. Like you can't do that, guys. You have to get your emotions under control. That's literally the only way you're going to be successful. Straight up, the only way you're going to be successful. So that's enough blabbing, guys. I think that's a good enough mindset for you guys. I think you guys get the picture with using good risk management with a trade like this. But yeah, I mean, in short, Romeo, I don't think dollar yen looks like a bad opportunity to take a small risk. And actually, Romeo, because I did and I just went over everything with you, and this is why I like doing these, guys. Because honestly, like I don't necessarily just do. I don't want to sound um, like arrogant or anything like that. Like I don't do these just for you guys. Okay, I don't do these just for you. I love to give value, but I do these webinars and these outlooks for me too, because it's literally points like this that now in my head I'm like, okay, going over dollar yen, this actually does look like a good idea to take a 1% risk with 175 pip stop loss with a sell on dollar yen, because sure, I might be wrong, I might lose 1%, but if I'm right, it's going to give me the opportunity to scale into positions. Let's say this does end up being the top for dollar yen, and then we see some reversal patterns at these highs. Well, boom, we're already playing with a premium because we're already in profit with such a small risk where we can, okay, now we can take another trade. If we see a strong reversal pattern, another sell with a better risk to reward, so we can risk 2% on that trader. Maybe still 1%, but a better risk to reward, right? With a smaller stop loss, right? Where what I'm trying to say, like, I'm sure you guys get the picture, but I just want to just make sure I'm very, very clear with what I mean. So let's say you took a 1% sell with dollar yen right now, 1% risk, boom, you got that locked in. You're short right now at 111.94, okay? Now this is obviously hypothetical. I don't know that this is going to happen, but let's say, whatever. Let's say today we saw this super strong bearish engulfing candle on dollar yen, right? So really strong reversal pattern on dollar yen. We pretty much got a perfect entry with our sell with that 1%. Now, maybe because we're playing with a premium, now we get in with 1% sell, down here at the bottom of this bearish engulfing candle, and then we have our stop loss just above the highs of, just above those highs. So that's obviously doesn't have to be 175 pip stop loss. That can be like less than half of that, like a 75 or 80 pip stop loss, which obviously allows us to achieve a better risk to reward on the trade. Okay, so that is definitely one way to go in. So Romeo, I appreciate you having me look at dollar yen, because it is one of those pairs I've been looking at, right? I mean, that's kind of an exception. Not like every pair I'm going to have like an instant idea to get a trade with, but this is one of those pairs that I've been watching for a while. Same thing with euro yen. I mean, even euro yen is another great example too, right? I'm long-term short on euro yen. I think the yen is going to come back and strengthen, just like I think gold will eventually strengthen more as well, and push things like euro yen and dollar yen back down. But we don't know when that's going to happen. So taking a stab at it with like a 1% risk with the opportunity to possibly like compound that trade in the future, it's pretty good. I personally think UJ will touch between one. Okay, this is Romeo, by the way. I personally think UJ will touch between 112.50 and 113 due to yen weakness and Nikkei's strength. I can see that too. I can see that too. I think I might have the Nikkei on here, and we can take a look at it very quickly. Yeah, the Nikkei is making a bit of a retracement. What has it made it back to the 15%? Wow, all stock markets have really made a pretty strong pullback. We can even see the DAX It's made a pullback. S&P and Dow, obviously, that's pretty crazy, right? I don't think a lot of people were expecting this move back. And then the UK, the FTSE, we'll see. Yeah, that's interesting. I don't look at stock into. I don't really invest into stocks too much. I think it's good to like take a look at a couple, but overall, also I'm pretty sure crypto is doing bad again. I don't know, crypto is just doing its thing, guys. Like I've told you guys before, and I'll tell you guys again. Uh, Crypto is something long term. Like we're talking like 5-year minimum, right? More like 10-year more type of thing, right? If you want, right? If it makes sense to you, like I've done, acquire crypto, put it on like a ledger or hardware wallet offline, right? An offline wallet, right? A cold storage. Okay? Set it in that. Don't look at it, like literally forget about it. I've literally forgotten about all my crypto, guys. Forgot about all of it. I don't have a ton in crypto anymore. Okay? It's not like the ton of money that I had at the beginning of 2018. You guys know when we were doing a little bit of trading on that. But I do still hold a small portfolio, right? I don't really focus on crypto that much. It has its pushes, it has its runs. Those are our exotics, and then we'll go back to our majors. So that's my insight for the day, guys. I hope you guys got a lot of value out of this. I really appreciate it. Like literally, even though there's not as many people on today's webinar, there's like every single person that was on here. It's like the same people, unless it's not updating for me. There's the same amount of people that were on here that when we started. So I'm glad that we didn't lose anybody. Okay. So guys, I appreciate you. Those are my outlooks on everything. If you're just catching the tail end of this and you missed my outlook on either AUD CAD, AUD USD, AUD CAD, or AUD NZD, I really think it's a lot of value. I don't think everybody else would have been here if it wasn't as value. Do me a huge favor, guys. I forgot to say it last week, but please smash that like button, guys. That's all I ask for doing these webinars consistently every single week for you guys, is just press the like button, right? Help that YouTube algorithm get it out to more people. That could help just like yourself. And you know, if you made it this far, I'm sure you're here because you received some sort of value. It's the best way you can say thank you, guys. I really, really appreciate it. And other than that, I'll see you guys in Telegram. Students, I'll see you on tomorrow's live webinar. Everybody else, I'll see you guys inside of Telegram and on next week's Outlook. So take care, guys, and have a safe trading week.